Hi there, a very good morning to all of you, and welcome to my channel Simply Stocks. And today I'm going to talk about another play for this holiday season, a stock that is down 20-25% from the top and is looking fine at the moment from a 2-3 year perspective as an investment. Not as a trade because the stock is down so much, but we'll discuss about price levels and we'll discuss about that company in detail. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. And I want to explain that I'm not a member of the NSE and BSE, and that I'm not an official portfolio advisor. And all these stocks or companies that I talk about is purely for educational purposes, and I'm not in favor or against any company that I'll be talking about. And whatever decisions you take is purely on your discretion. And kindly do talk to your financial advisor before taking any call on the stocks that we are going to talk about. Before I talk about this company, a small request that kindly support me on Patreon. Once you do that, help me grow the channel. Help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts from time to time. Also, you can pay $100 upfront. You get 1 year access by paying for 10 months. For detailed market or company talk, you can directly email me and we can work things out with a fee. And also, if you cannot pay on Patreon, you can get the WhatsApp or the YouTube membership by clicking on the join button on YouTube or by emailing me for that yearly WhatsApp membership. Now let me take you to the Screener website and we'll discuss about this company in detail. So the company in question is VIP Industries. This stock has performed exceedingly well over the last 3 years, but over the last 1 year or so, the stock is relatively down, and it's because of the relative valuation for the stock, which is around 50 times at the moment. But the stock is trading around 570, 580. Let's just discuss a little bit about the company. So about VIP industry is engaged in India in the business of manufacturing and marketing of luggage, bags, and accessories. And the key points are they have the market leadership in among it is among Asia's leaders in manufacturing and supplier of luggage and backpacks, etc., and handbags in the market, and it's the market leader in the organized space as well. In terms of the brand salience, the company's brands of VIP, Skybag, we have the Carlton, and you can say Aristocrat. They are one of the best brands in this segment and the luggage industry. And most of these brands have been in the industry for the last 50 years and enjoy strong brand value. Their new launches has been in Q1 FY23. They launched more products in the same space and in the luggage category. Their revenue performance over the years in Q1 FY23, their revenue, if I say that how the revenue has been you can say shared, then premium and mass premium segment accounts for around 57% of the revenue. Aristocrat is around 35%. Then we have corporate, which is 4%, and international segment is around 5%. If we look at revenue by category, then we have uprights around 71% of the products which are uprights. Bags, etc., is 7%. Backpacks is around 12%. Ladies handbags is around 4%, and export and accessories is around 6%. So the major business comes from those upright bags that we carry. We open it up and we carry, drag it with wheels. So those are the products that are more or less sold by the company. They have expanded manufacturing capacity in FY23 that will come on stream in FY24. That is going to give a lot of you can say strength to the revenue as well in FY24 and 25. So there has been capacity expansion in that regard as well. There has been a multi-channel distribution of the products over the years, and during FY22 it added 32 EBOs, while its overall distribution network stood at 376 stores, which is quite interesting and quite large in that sense. And that's why see, they have become a brand in itself in this segment altogether. It is just that the stock has fallen because of higher valuation, and that's why it looks pretty attractive at this point of time from a 2 to 3 year perspective with an upside of 40-50%. And that's why this has been covered over here. So most of the business per se is pretty strong, and it is the market leader in the bag space here in India and in Asia. The geographical footprint, if we look at, it is headquartered in Mumbai, and in addition of its stores presence in India, it has growing global footprints with the products supplied to 45 countries globally. So that's a pretty big number in terms of international exposure that the company is having currently. Apart from having the business in India about 15-20 years back, they had all their business, virtually 90% of their business came from India, but now they have expanded into 45 countries altogether. In terms of future outlook, the company is planning to add around 120 to 150 stores on an asset-light basis model in the current year, that is FY23, by the end of FY23. So they would have done that over this period. Further, it is expanding its retail store network to around 500 by the end of FY23, which they should have done by now. In terms of product mix, it is focusing on production of sky bags and aristocrat bags to fulfill the screaming demand in this segment. So as I mentioned, their aristocrat brand is doing extremely well and is going to pick up even further as global, you can say, travel increases going forward with the pandemic going away, although there are cases now cropping up again in India, but things are much better than what it was in FY20 and 21. So that was about the company. If we look at the valuation part altogether, then currently the stock is trading around 570. Yes, it's trading at 50 times, 51 times, but it is not ultra expensive. I feel that a 10% downside is a major possibility, and that's why uh, from a point of view of, say, as a trade, it's not the best of it, because the stock is under a lot of pressure. But from a perspective of 2 3 year investment, VIP looks pretty good from these levels of 570, 580. If you look at the numbers per se, December numbers were pretty good. If you look at the consolidated numbers, 526 crores of sales versus 397 crores. We had a profit of around 57 crores versus 73 crores. So that was a jump of around 25-30%. Margins at 14% was pretty strong. 14% remained robust. So what has happened is that margins have come back. Although in FY19 they had margins of around, in FY20, in December 19, they had margins of around 16% and was doing pretty fine. So I think they are on the recovery path. I think margins should improve going forward. Raw material costs have come down appreciably from what they used to be, say, 8 9 months back. Eventually, if you look at profits, then there were 44 crores versus profits of around 33 crores last time around. Yes, there was lesser tax this time around. So if you look at profit before tax, 51 crores of profit this time around versus last year being around 44 crores. So that's a jump of around 18 17 18% profit terms as well. So overall growth is seen in this segment, and we believe that an EPS of around 12 and a half rupees is possible this year. And I have an idea that over the next 1 year or so, that EPS could grow to around 15 rupees, at least around 15 16 rupees over this period. So I think 15 rupees EPS is expected in FY24, and based on that, the stock is, you can say, not ultra expensive, but can give you around 30% over the next 18 months, and around 45-50% over the next 2 years. There could be a chance that the stock could give you that sort of a return. In terms of the chart pattern, we'll come to the chart patterns in a bit. But if you look at the balance sheet as well, we have a situation where the reserves have grown over this period. So what has happened is that the reserves have grown from around 300 crores or so to around 640 crores, and borrowings have also increased. So this has been a concern that they have, you can say, landed, and they have had a situation where they had zero debt, and now the debt has gone to 290 295 crores. But debt is there because of the fact that they are looking to expand into other markets and looking to expand capacity. So they have taken up these sort of debts over that period. So overall, per se, if you look at the ratios as well, debtor days have been around 60 62 days versus 82 days. So that's pretty reasonable. We had inventory days which are around 300 days at the moment, which has gone up. So they have an inventory on board at the moment. But I think demand is going to only pick up in this season and going forward as well. If you look at the shareholding pattern, 51% is with the promoters. We have FIIs, which hold around 9.3% of the stake. So if FIIs have continuously increased stake from around 5.8% to around 9.3%. DIIs at the moment have decreased their stake a little bit, but overall you see that the public shareholding has remained stable at around 19%, not increased a lot. It has been, you can say, large investors who have been buying into the stock. Even in public shareholding, there is around 1% of the stake which is with an HNI, which is also pretty decent. So the concern in here is the high debt that the company is having. The concern is the inventory that the company has on books. But over the next 2 3 years, with the higher demand coming in with travel, and with the valuation that is trading at the moment, if we look at on a PE basis, the stock is trading at 50 times. It used to trade at even 200 times earlier during the pandemic. I think it is reasonably priced. I won't say it is priced at very attractive levels, but one can start accumulating from these levels. A better understanding of the stock would be when we consider in terms of market cap to sales. The company is currently trading at around 4 times sales, whereas on an average, if you look at a 5 year average, it's around 4.6 times that it used to trade at. On a 3 year average, it used to trade at 6 times sales, and this is what I'm banking on. The sales is going to grow a big time going forward. If this year the sales are closer to say 2000 2100 crores, I think in the next 2 years I won't be surprised if we see something like 2700 crores of sales. And just based on 2700 crores of sales, if we have a situation where the company ends up trading at say 6 times sales somewhere in the next 2 years, we are having a situation where the stock would be trading at 16,000 crore market cap, which it is trading at 8,000 crore market cap. So a doubler from here is the maximum possibility over the next 2 2.5 years. But I feel 50 50 60% upside is very much possible on VIP Industries. So you can see the stock trade at around 900 rupees over the next 2 years. That's my understanding on VIP. It's not a trade, it's not a short-term trade because of the kind of charts at the moment. But over the next 2 years, I think the company is going to perform pretty well. So this was a video on VIP Industries. Please like and subscribe my channel, hit the bell icon so you can get my videos straight away when I post it. Kindly support me on Patreon. Thanks a lot for watching.